Morgan Stanley says that Russia could default on its debts as soon as April 15th, and they are warning about the butterfly effect, the wide-ranging consequences this will have. At the same time, Goldman Sachs is selling Russian debt to hedge funds. We're going to get into all of this, don't worry, and much more about the specific data around AMC and what is going on there. So hit the like button and subscribe to the channel if you have not already. Also, right now, Webull and Moomoo have great promotions. Check those out if you guys have not already. With Webull, deposit $100, get 5 free stocks. And with Moomoo, if you deposit $1, get 3 free stocks and an additional share of Neo on top of it. So that is there to support the channel if you guys do want to, and also pinned in the top comment is the link for the trading community. Nonetheless, let's get into this video. I am just shocked by what I was just reading. So first and foremost, AMC closed down 6.66% down. Not the greatest numbers there, if you know what I mean, but an after hours up 0.21%. So it was not a great day. We did not close over $15 per share. I don't think we're going to stay under $15 for that long. You guys got to remember, who is selling AMC right now? Who's selling it? At a certain point when stocks fall so much, you lose sellers, but you don't really have as many buyers. But what is driving down the price of the stock is the bid and the ask. So when short sellers flood the markets with stock that they are shorting, that can drive down the price of the stock if people aren't as willing to buy that stock as aggressively as it is being shorted. So that's what's going on. I do expect us to bounce over 15 on Monday, as we do have the Fed FOMC meeting the 16th of next week. That is Thursday. That's what everybody is going to be watching and paying attention to. I really don't expect any bombshell announcements coming out of that. We pretty much know what to expect, like the 0.25% rate hike. That is coming. That is for sure coming. If it doesn't, markets would rally off of that. If we get that 0.5%, markets would tank on that. But I think they've been pretty clear, the Federal Reserve, that they're only going to do 0.25%, and then they'll likely take their foot off the gas, and they're going to probably say, hey, we're going to wait. We're not going to guarantee that we're going to do a rate hike the next meeting because of this war that is going on and the possible contagion here between Russia, China, and U.S. investors. I don't think the Fed is that stupid to hawk down on the economy right now. When demand is slowing down, companies are guiding lower after initially guiding higher due to this Russia situation. And like I said, all of the uncertainty around that. You could destabilize, and we have already destabilized, but even more once Russia does officially default, which is a matter of time. It's going to happen, and that is definitely going to throw a wrench in the Fed's plan. So I do think if the Fed comes out and they say, hey, we're going to do this rate hike, but we're going to wait and see what the data says, markets probably going to rally off of that, and rally quite hard. That's why I want to be in AMC. I want to be in all of these stocks before the Fed meeting. I think there's a better chance we rally after the Fed meeting than a drop after that Fed meeting. So that's really what to expect for next week. I do think you will see a Green Monday or Green Tuesday as well. You typically do when you have so much time, in the beginning of the week heading into that Fed meeting. So that's important to know. It should be good in that aspect. As far as what's going on with this whole Russia situation, so we're going to look at this. It says Russia's immediate default could be catastrophic. Here is why. And it goes on to say that basically the exchange rate was 120 rubles per $1 US. The Kremlin has also barred its citizens from withdrawing more than 10,000 in hard currency from the nation's bank. So obviously not a good thing. And it said that the U.S. would stop importing Russian fossil fuels, and European Union said it would cut its consumption by 2/3 this year. And basically, we're killing their economy and making it pretty much impossible for them to pay off their debts. Even the citizens are looking for ATMs that will pay out in dollars or euros. 23,000 users in one Telegram channel. So the situation over there, pretty desperate. But it says right here, in quotes, If the currency nosedives, by definition, that means the country doesn't have the availability to pay back its dollar-denominated debts. It just doesn't have the dollars. Also, Morgan Stanley's global head of emerging market sovereign credit strategy wrote in a research note this week that Russia could default as soon as April 15th when a 30-day grace period on a $107 million bond interest payment expires. Two more bond payments worth $359 million and $2 billion are due March 31st and April 4th, respectively, with a 30-day grace extension. And then it says Russia's majority state-owned gas giant Gazprom has a $1.3 billion bond payment due March 7th. So these payments, they go to somebody. They go to hedge funds, mostly banks, and they're not going to pay it back. They don't have a way to pay it back because their currency has fallen so low. $1 equals about 200 rubles. So you need massive amounts of rubles that simply just don't hold any value right now. So when you do see this inevitable default, there's a couple things that are going to happen. A lot of European banks are going to be hit very hard because they have hundreds of billions of dollars of exposure. But at the same time, China and Russia are more interconnected. And China is having its own set of issues in its real estate market as well as its own credit disaster, right? They can't even pay back their payments. So China is going to get hit off of Russia defaulting. Europe's going to get hit. We have investments a lot in Europe and in China, so it's all interconnected. And this is the butterfly effect, like they say here in this article. And they basically go on to say that there's no way to exactly know how bad this will affect the markets, how interconnected everything is, because there's thousands of different transactions or investments that take place between us, Europe, Russia, and China. It's impossible to know until it happens, but that this will dampen the markets for probably the next couple of months, meaning there will be a lot of fear in the markets once this does come to light. I don't really think the markets are fully understanding that Russia's going to default, and the American, economy is interconnected with China, Russia, and Europe that have a lot of exposure directly to, obviously, Russia. So that's going to affect everything, and it's not a good situation. On top of that, you have Goldman Sachs being the shyster they are, and it says how Goldman Sachs profits from war in Ukraine, loophole in sanctions. And this is completely legal, but check this out. Goldman Sachs, the giant New York investment bank, is cashing in on the war in Ukraine by selling Russian debt to U.S. hedge funds and using a legal loophole in the Biden administration sanctions to do it. You just got to question the hedge funds' IQs at this point, because you don't want to touch Russia with a 10-foot pole, but they're buying Russian debt. I don't even care if you're buying it 1 penny on the dollar. You're still going to lose money when it goes to zero, and they're selling billions of dollars worth of this, perfectly legal, because Goldman Sachs is not doing business with another bank, but they're doing it in the secondary market, so everybody turns a blind eye. But this is making our direct contagion to Russia, or our direct link per se, a lot stronger, and it's going to have a bigger effect on our markets as well. And I think this is a good thing for stocks like AMC that are potential short squeeze trades, because it makes it that much harder for hedge funds to pull a bunch of capital for their margin calls when AMC does inevitably go through a rally. So that's why I wanted to bring it to you guys. I just can't really believe this. I'm shocked. I don't know what the hell is going on. Hedge funds are really stupider than we thought. And I guess that's just that. Let me know what you guys think about that down below in the comment section. But let's get into some of the AMC specific data for the day, including the order text data. So for the option flow, we've seen positive order value of 57%, 53 orders totaling $13.58 million. That is actually a substantial amount of money that went into AMC options today. And a lot of those incredibly bullish. A lot of them. But you could see this shyster right here. Look at all of these $15 puts that are coming through by the same person. Look at that artificial shorting. I'm telling you guys, it's not investors like me and you that are selling out of AMC. It's all of this artificial shorting. Look at this. All of this, you can see the time is back to back to back, just $15 puts for March 18th, all the way down the board. Like, that's all it is here, is pretty much $15 puts. A lot of artificial shorting that is going on. Somebody obviously does not want AMC above $15 per share, and the break even on this would be about $14.30 per share, which that's kind of where we are at right now. So it definitely looks like there's a lot of shorting activity. Somebody is wanting to keep AMC stock down. The current short interest of free float sitting at 20.59%. Current shares that are sold short of 106.06 million. Cost to borrow max of 2.32%, and the utilization is 100%. So not too much has actually changed here. Actually, you're only seeing return shares of 830,000 and borrowed shares of 883,000. A borrow change of 52.38 thousand. I don't know what's going on with this data. Maybe it's a Russian cyber attack here or something. You can get 10 if you want, but I don't think we've ever seen numbers this low for a given day. So interesting. I don't know what to make out of that, but nonetheless, as far as a potential gamma squeeze for next week, it does look very likely if we do see a rally in the stock, with about 3,400 calls that are in the money and 343,000 calls that are out of the money. For the put side, about 104,000 puts that are in the money, 46,000 puts that are out of the money. So a lot of potential buying from the market makers that would have to happen if the stock price goes up. Puts go from into the money, out of the money, and the calls go from out of the money into the money. And both of those option activity moves do call for hedge funds to hedge out their positions by buying shares of AMC. We will go over that in a video later on today or over the weekend, specifically what we are looking at as far as the options are concerned. Now, as far as the max pain for next week, that is $20 per share. So that is the substantial move to the upside. So we'll have to wait and see if we can even get close to those prices. But like I said, Monday, Tuesday, you're probably looking at some kind of bounce that will be coming. Who knows how strong that is? But I definitely think after the Fed, or I should say leading up to the Fed, like I said, you're going to see a lot of fear. And then after the Fed as well, gives their speech and gives that dovish tone, which I think they will, then I think the markets will rally based off of that nonetheless. As far as the technical analysis, again, we wanted to get to 15. We did not today. We are under 15. I think that will happen early next week. I seriously don't think we are going to stay under 15 for all too long. If we don't go back above 15 next week, then you could make your way back down. But then again, I think the fundamentals and this demand zone just support 15 or higher so strongly. So, it wouldn't be my prediction to say we're going to 10. These prices seem pretty reasonable to me. A little bit over 15 or a little bit under does seem reasonable. The RSI is almost in oversold territory at 35.68. So approaching that, and you do tend to see bounces when you actually do get to that oversold territory down there. The MACD is pretty neutral. Levels we have to break out above is obviously $16.50 to $17, and then the 20-day moving average is at $17.32 per share. I want to see us get back up to $18.50 next week, or if, best case scenario, above $21 per share. Not going to hold my breath, but it certainly is possible if we get a dovish Fed. I think you'll see a lot of shorts that flood to cover. Volume still incredibly low for the day, about 28 million. Over the last 3 days, you've seen 25 million the last 2 days for volume, and today 28 million. So very low volume. This is good. Trade is becoming less crowded, and that will make for more profits for us that are holding on. So that is going to be all for this video. Hit that like button, subscribe to the channel, get yourself free stocks. Links down below in the description, as well as come join the trading community. Link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.